Good morning. Good morning. Good evening, traders. Good to see you. I just wanted to thank everyone for how supportive y'all have been. It's been a rough 9 months or so for my family and I. But you guys have been so awesome and so wonderful, and so I'm going to make an attempt to get back to recording educational bids for you guys. Get this mouse out of the way. I had a number of people that kept asking me to do a swing trading video and what was the process I would use and how do you do it kind of thing. So I typed up the criteria I look for, and I am a reversal trader. I don't, generally speaking, like trading breakouts. It's just not my style. Doesn't mean it's wrong for anyone that trades breakouts. That's totally cool. It's just not what I do. So more power to you. Some things to be aware of with reversal trading and why you see a lot of times double bottoms, double tops. What's happening is market makers during that consolidation time frame, they are basically running stops in both directions and making the spread. So it's a very lucrative time for market makers. They're also providing liquidity for the big boys to start scooping up shares and oftentimes take that trade in the opposite direction. So if we had been in a downturn, a newer trader is probably going to think, oh, I'm going to jump in short. Just at that moment, they build up the liquidity for the big boys to get in long and scoop up the stock, and boom, it goes off. Usually you see, and I think actually this chart has this, you'll see a double bottom or a slightly lower low. And I think if we zoom in, let me grab my line. Yeah, this made a slightly lower low on the weekly. That happens a lot. You can see it here on the daily too. You get all this congestion, and sometimes it will take right off out of there. Sometimes it'll double bottom. Sometimes it'll get this slightly lower low like you see here, where market makers are just trying to fake out the shorts and get just that extra edge of liquidity before the thing takes off. Just thought I'd show you that example real quick. So when you swing trade, obviously you're looking to use the higher time frames, 130 minute. This is the daily candle divided into 3. 195 minute. This is much like the 4 hour, only the trading day isn't 8 hours long. It's 6.5. So it divides the daily candle into 2 nice, neat halves, basically. So you don't have to deal with the overlap that you have on a 4 hour, because it makes my brain go blah, like I don't know how to process it. Daily, weekly, monthly, quarterly. I like charts that are pretty to the eye. You will often see with longs what looks somewhat like a W pattern. The opposite is true for shorts, an M pattern. I'll show you a W pattern. In fact, pen is a W-ish pattern. An M, I'm not going to dig around in the charts for that right now. Most things are longs. I'm sure they're there. I'm just not going to dig around for it. I like extremes, meaning things that are at the top of the bottom of the broadening formation, which brings us to the next point in just a second here about the STRAT. But you see how this, if I start here and go down, go up, go down, let's just assume this goes up, that would form a W pattern. That's basically what I'm talking about. The other thing is, I like charts that are quote unquote pretty to the eye. What do I mean by that? Well, to me, like, this isn't too pretty looking. It's kind of bleh, all over the place. So while there's a STRAT setup, a true to reversal here, on the weekly off this wick. It's not one that I would take because you have all of this, so it could get caught up in all this rigmarole. For me personally, I would prefer to take this above this area, and it's not really a breakout because it's still near the bottom of the broadening formation. If I were to draw that like this, right? So even if it breaks out from that region, all right, that's how I would draw it. So I prefer a chart that looks like this, where, yeah, I mean, you do have the wick on this candle here, but to me it seems a little bit cleaner to pivot machine gun these guys back out. It's not quite as wonky as pen is right now. Does that mean I'm right? No, it doesn't mean I'm right. That just means it's not my favorite when it's all kind of cuddled up in there. This thing could blast off tomorrow and I may regret not taking it, but that's such is life. You can't take every trade. You got to have criteria or you're never going to get anywhere. So that just happens to be mine. You can use it, you can leave it, whatever you want to do. So the STRAT, again, like I mentioned, top or the bottom of the broadening formation. I like 2-2 reversals, 3-1 reversals. I like REV strats on the weekly, monthly, quarterly. We do have the new month coming up in July, and it is the new quarter too. So there's potential for a lot of good longer term trades. We just got to see what our buddies, the futures, are doing. And for newer traders, don't trade against the futures. You just stick with where the market's going overall. So QQQ and SPY are kind of the most important, but really you want to look at all of them. I have one monitor that just has all four on it: IWM, SPY, Qs, and diamonds. And I'm not going to get into things like relative strength and all of that. For more advanced traders, maybe I will really quick. For more advanced traders, if there's a stock that's been really beaten up and it just wants to run, I'm okay going against the trend in that situation because we're at an extreme and the path of least resistance is most likely to be up at that point. But generally speaking, the rule is you want to stick with the direction the market's going. The other thing you really need to look out for is earnings. So don't get stuck holding into earnings because you didn't realize it. There's no excuse for that. The trading platforms, most of them have all of the earnings dates on there. So you need to pay attention to that. It's pretty critical with swing trades. If you hold to earnings, you'll find over time, it's just, there's no way to predict it. You can be spot on. Everything can be just as you thought. Earnings are great, and then something wonky happens, or it's buy the rumor, sell the news. Just not worth it. It's not a good use of capital, in my opinion. Not my area of expertise. If it is yours, awesome. Maybe you can teach you something. Time frame you were buying in. I'm trying not to mismatch time frames. Sometimes traders will buy, and it's easier to explain sometimes on the smaller. They'll buy a trade off a 5-minute chart and then just turn it into a swing when that wasn't the plan. Whatever it is you're doing, whatever your plan is, you can absolutely buy it off a weekly. And I don't know, let's say you bought 5 contracts and you bought a further out expiry and there's magnitude there and you planned at different targets to hold it longer. That was part of your initial plan, that's fine. But if your plan was for it to be a weekly trade and you had your target and you got greedy and just decided to hold it longer, that's not a good idea. In the long run, it's going to hurt you. The most important thing in trading is discipline, coming up with their plan. Every trade, you know where your stop, your entry, and your target is, and you just take it off. at your target. That's how you make money. And you'll look at it and go, oh my gosh, it kept going. And yeah, it happens, you know. But a trade that you made money, that's a good trade. We're here to get paid. We're not here to get the exact bottom, the exact low, you know. Plan your trade and follow your plan. That's how you're gonna be successful. In the money versus out of the money, I'll explain this in sort of a backwards way. In the old days, in terms of what option you buy, there only used to be regular way expiry. And regular way expiry, I mean third Friday of the month. So in the old days, that's all there ever was. There weren't weeklies, and we're spoiled today. I want open interest, a minimum of 1,000, because I don't want to be stuck in something that's illiquid I can't get out of if I'm profitable, or even if I'm not profitable. Needs to be quite a bit of volume, 500 to 1,000, and these are contracts. And another factor to take into consideration is delta. So delta is the Greek that determines how much your option will move for every dollar move of the underlying. If you have a delta of 1, for every dollar move on the underlying, yours will move $1. If it's 70 delta, 70 cents, so on and so forth. And if I'm doing a very short trade, let's say it's a weekly option, I'm going to buy for sure a much higher delta. I don't want to have to worry about being exactly right on time and magnitude when I've got theta decay going against me. It's rare that I'll use the underpriced options. There are times I'll do it, but in general, I err on the side of more time. So 2 weeks to a month, depending on the chart. There might be some that I take out longer, but I'll kind of match that up. I match it up based on, okay, if they're not reporting earnings, for example, until end of August, I'll probably buy a regular way expiry September, so that I can hold right up to earnings if necessary and then dump it. If I buy a regular way expiry in August, it's going to expire the week before, and I may want to hold it. I don't mind holding on a run into earnings. I just don't like holding through earnings, if that makes sense. So in terms of when you use in the money, out of the money, I tend to use out of the money if I have a little more time and I've taken into account the average true range. This is critical to know. You got to know how much that stock moves. If you're buying, let's say, an out of the money weekly option on a stock that moves 50 cents and your magnitude for that weekly trade is $5, your chances of getting there in a week just ain't there, and you're gonna expire worthless and just give your money to the market makers. So just things to keep in mind. ATR is critical, and I use 2 trading platforms, TradingView and TC2000. On TC2000, I have the ATR automatically plugged in, but I can also take the magnitude of weekly candles, so I'll pick one of the smallest ones, and I'll say, okay, my target's here on the setup I'm looking at. How many weeks is that going to get me? You gotta really pay attention to ATR and how much something will move in a week, and account for pullbacks. So if it moves $5 a day, there's 5 days in a week, you think it's going to move 25 points, I carve off 2 days for a possible retracement and say, okay, it's likely to move 15 bucks. That's just what I do. If you're using stops, you need to have much wider stops. So depending on the amount of capital, I'll typically have a stop of 50%. You got to give these things room. You really do. And the chart will tell you where to put the stop, and you just got to leave it alone, let it do its thing. Which brings me to the next point. You can set up one cancels the other orders. I'm not going to get into that, but you can search up on YouTube and this is where the STRAT's super helpful. Here's my target, here's my entry, here's my target, my stop goes here. You can program that all in and then just leave it be, especially for those of you that are working. And then last, I would say keep trying. We tend to make an attempt at these things. It doesn't work. We give up. Keep your watch list going. I mean, there's gonna be another opportunity. If you miss the trade, there will be a pullback. There will be a pullback. And I'm just saying that because when I first started trading, I was a chaser. I was a FOMO big time, and I'd freak out like, oh my god, I missed the trade. Like, there's not going to be another trade. It was dumb. So don't be me. So keep trying. And then lastly, I'm just going to say a brief comment about mindset. You know, if you're struggling, trading is hard, first of all. If you think you're going to get this in 6 months or a year, some people do. So if you're one of those amazing people that just takes to it, congrats. My hat's off to you. Not the case for me. I'm hard-headed. It took me longer than I would have liked. But I'm also one that doesn't give up. So that's where I've got to go. You can't be a quitter and want to do this. And I've had people text me and say, why can't I do this? You know, I've been trying, and these traders I know for a fact have had some really excellent trades. And I think what they're meaning is, why can't I be consistent? And you've got to be really cognizant with your when you're trading of what you say out loud. So if you say things to yourself like, I suck, or I can't do this, your subconscious will accept whatever you say out loud as true. And then it will cause your conscious to act it out. So if you're saying, I suck, I can't do this, anything negative, your subconscious says, okay, great, how do we make that happen? Because that's clearly what they want. No. Stop that. Do not say out loud. Try not to think. How do you change that? It's hard. We're humans. We beat ourselves up. I'm absolutely someone that did that to myself. And basically, start concentrating on the trade that you made that was a winning trade. And meditate on that trade several times a day, how good it felt. Tell your subconscious, I am a great trader, look at this example, whatever your language is. And I'll put some links in this video that have really helped me, and create a different picture of who you are as a trader in your subconscious. I'm telling you, just like going to the gym and lifting weights, you do this is the workout for your mindset and your brain. So get to work on it. It's critical. You cannot succeed as a trader long term without your mindset being proper and without doing the work. You just can't. So, like I said, I will put some links in this vid for that. This is vid part 1. I'm going to make another quick one with some possible swing setups you can take this week, okay? So this is just the overview of what my process is. I'll also include a link to my little sheet if that's helpful, and we'll go from there. Have a good day.